All right, let's talk business now with John Grace. He's the founder and president of Investors Advantage Corporation. John, thank you for joining us tonight. John, before we get into the markets and get into those details, I want to get your reaction to news from JP Morgan. They're saying that CEO Jamie Dimon is recuperating after having emergency heart surgery. The statement going on to say that he underwent successful emergency heart surgery to repair a dissection. They say that it was caught early, that's the good news, and that the surgery was successful and that he is, quote, awake, alert, and recovering well. John, JP Morgan trading down about 1.2% in after-hours markets. What's your reaction?
Well, we all hope the best for him and his family and for all of us. These are trying times, there's no doubt about it, but I have to imagine he has the best possible medical care. He also has a lot of drive and determination, so this is just temporary. I'm sure he'll bounce back as fast as he possibly can.
Do you think that JP Morgan without Jamie Dimon would be a very different company?
I don't think so. I mean, those companies have so much depth. That there are people lined up to take over from this position, from that person, for whatever reason might be. You know, things do happen and changes do occur. But the staff is there and everybody's on the same page as much as I can imagine. So as I say, he'll be back. And if he's not, then they'll have another person step up and fill his shoes.
All right, let's talk about the markets, John. We saw a Sanders relief rally yesterday, if you will. Investors feeling less anxious that Bernie Sanders and his socialist policies may become the nominee after the Biden Super Tuesday win. But that wasn't enough to keep markets in the green today. Safe to say that today's dip really largely driven by coronavirus concerns.
Well, yeah, we like to say that this particular, virus is the inverse neutron bomb of finance, because what do we have here? A whole lot of uncertainty, which means nobody knows how it's going to turn out. And you know, of course, Michelle, that stocks like to take the stairs up, but the elevator down. So I'm saying hold on very tight, keep your arms and legs inside the vehicle, because it's going to be very, very dicey times. And I would also submit that this is the perfect time for investors to discover, probably for the first time, how much loss they're willing to accept, because I think they could be very well tested by that in the near term. You
would recommend staying in or getting out now?
It depends. If you're young or you don't need the money or you don't care what the account does, stay in. Buy the dips. By the way, buying the dips didn't work so well with Japan from 1991 for the next 10 years. And by the way, the Japan stock market and the Japan real estate market are not back to their highs of 1991, and that's nearly 30 years ago. Could that play out here? Well, that's my point. If you don't care what your account does or what your equities do, then just enjoy the ride.
But good if you point. Depends on your timeline there. I do want to get your thoughts, though, about what we're seeing over in China. The Shanghai Stock Exchange has actually been up about 2.7% over the last 5 days. In fact, while we're all focusing on what's happening in U.S. equities, the Shanghai Composite up 11% for the month. What does that signal to you, John?
I see that it's jumped 14% over the last month to a new year high today. So what it says is that wherever money is loved, it's well taken care of. But what it also says is that I suspect that a lot of this is greed. Everybody's looking for any way possible to get as much money in the books as they possibly can. So these are temporary ups, but it is good to see that as some things go up and other things go down, that's why more diversification, I think, is advantageous, but also keeping a global perspective, which I think you help your audience do, to see, don't just look at your little block and look at everybody you know, because that's not telling the story. Look at the country, look at the world, and then look at the behavior of people, buying behavior of people based on age, so that you really get a sense for what's going up and what's going down in advance. Because, by the way, just put it in perspective, 14 is the age at which we all in America ate the most potato chips in life. 41 is the age at which parents bought the most potato chips for their, on average, guess what, 14-year-old kids. So notice the age dictates everything. It wasn't about the service or the taste.
Well, that was quite the metaphor, John. John, thank you so much. John Grace, founder and president of Investors Advantage Corporation. All right, that's our show for tonight. As always, I would love to hear your thoughts, so please feel free to praise, whine, or just opine by writing to me on Facebook and Twitter. I'm Michelle McCory, and I will see you tomorrow on Clear Cut for the clearest